Welcome back, traders. The market had a pretty significant pullback as we digested Fed Wednesday and we also digested an ECB meeting. Let's take a look at the carnage across the board. We've got multi-percentage declines in a lot of these assets. And to be honest, this looks like it is a chart of weekly performance on a bad week in the market, not daily performance. So definitely a huge shock to the system. The S&P 500 finished down 2.44%. Our NASDAQ QQQ down 3.36%. Small caps are down big. The Dow Jones, you name it. Our ARK Innovation ETF was down almost 5%. Last night, we got the news that Elon Musk indeed sold more shares. The dollar index was positive, and that could have something to do with the fact that the Federal Reserve pretty much said, hey, market, you're not pricing in as much monetary tightening as we are actually going to do. Our trend model did flip to a -3, and we acted accordingly. We took down even more risk today. Our up volume finished out at 12.6%. You might be wondering, like, what's going on with the market? Why is the market selling off? What's the deal here? Well, I distilled it into a few images. Here's what I see the market struggling with right now. So, of course, we have the Fed hiking interest rates. They are rolling off the balance sheet. They're tightening monetary policy to fight inflation. And we are seeing signs that inflation is coming down, right? That's this green chart right here. You can see the down arrow. This is the direction that inflation is moving in. However, the longer the Federal Reserve keeps this monetary policy super tight, the more damage it has to the financial markets, and it'll take the economy that maybe was already slowing and really accelerate that process. So we also have the economy slowing in line with inflation. At the same time, market liquidity is coming down. So think about it. The earnings outlook is getting worse and the liquidity is coming out of the market. So, I mean, it's a great thing that inflation is going lower, but essentially what might end up happening is I know investors, they're like, well, if inflation comes down and the economy gets really bad, eventually the Fed will start another QE program. This market liquidity line will move to the upside. And boom, that's the start of a new bull market, right? I think the problem is, though, in order to get this market liquidity arrow to move to the upside, really what it would take is inflation coming down big time, and it would have to come down big time. And then we would also need basically a cataclysm in the economy. Because if inflation just moderates and the economy is still doing good, the Federal Reserve is not going to go, okay, let's do a QE program, because they know that that might actually just start the inflation right back up. So basically, in order to get what the market really wants, something really bad is going to have to happen in order to get this market liquidity to come back. So I think against this backdrop where we've got the economy and earnings moving down, we've got inflation moving down, we've got liquidity moving down, it's really just remains this market where rips are being sold into. Perhaps the market has a higher floor now that inflation's getting a little bit better, but this is really the conundrum we find ourselves in. All right, let's take a look at the index and see what actually happened from a technical perspective. The VIX elevated, right? We're up 7.99%, but is the VIX really even that elevated? No, not really. This could certainly get a lot worse. And the other dynamic that we have to contend with is the end of the year seasonality. And I know you might be watching this and going, yeah, but the seasonality's bullish. That seasonality happens for a reason, and it typically is related to new flows coming into the market, and they might be coming in January, and the front running of those flows. But in a raging bull market, those flows are going to be positive. Everyone's got a green portfolio. Everyone has more money than they did the prior year. If they want to take on more leverage, they can do that. New investments are being made. Everyone is happy. But this year has just been the mother of all wipeouts for so many investment strategies, areas of the market, and that could really end up moving in reverse. Then we've got investors shutting things down for the end of the year. It's just a really tough, very tough backdrop. And it looks like investors just honestly hit the panic button. The S&P 500 tore through a lot of levels. We had this essentially like a false breakout here. And at the time, it felt like the market could keep moving up. But I think now with hindsight 2020, it's very obvious, the strength was just sold into, then this strength was sold into, and then the dam really just broke today. We're below all these key moving averages. We're below this monthly point of control. This means that most investors that purchased the S&P 500 in November, they are now underwater. And now on the weekly time frame, the daily time frame, and the hourly time frame as well, they're selling on all of those. So that's a really tough combination to deal with. And here's the other thing too. We're trading pretty much right down to the low end of this recent range. So even on the short side, it's tough to really be like, okay, now I'm going to enter short. Maybe if you think the market's going to break down to this monthly value area low, you can go for it. But to be honest, for me, in this environment, the best hedge ended up just being cash. So yeah, things are certainly dicey at best into the end of the year. Let's take a look at the NASDAQ. The NASDAQ really was just never able to get traction off the lows. We've given back most of the rally in just one day. We closed right on this 50-day simple moving average. The other thing too is we've been here before, right? If you've been watching my videos, you know that we've been in a bear market all year. And once a huge waterfall happens in the market, like what we saw in the NASDAQ today, look at this big candle. Does the market typically just like V-bottom right off of it and move to the highs? No, these are very messy affairs. Once we get that huge bearish engulfing candle, like we got back here, can lead to a lot more weakness. And even if it is like a bottoming process, we're just getting capitulation, it usually takes time. Like here, it's like we had a rally attempt, it failed, rally attempt failed, rally attempt failed. And, it's a long process. Like you have to have a basing period. So I think as things just start getting obliterated, that's typically not when you want to just, rush in and just be like, well, it went down, so it's got to go up. I think this could end up being a trending move. Russell 2000, we broke below our monthly value area. That's a really bad technical look. And we're below all these key moving averages. And we also have to remember the CTAs, trend following strategies, they had added exposure to the market. And we discussed this on our weekend market analysis videos. Based on how they're positioned, if the market moves lower, they have a lot of assets to sell. So maybe that's part of what happened today. Those CTAs just puked. Maybe there's more to come. It's way too early to say what is the case and what's not. The Dow Jones, trading down to the low end of this recent range, also looks pretty bad, maybe not quite as bad as some of the other indices, but it's, there's no denying this candle. Our ARK Innovation ETF, remember we found out Tesla, oh my gosh, they keep selling shares. This thing has had a really rough go of it, and this is trading all the way below our monthly value area low. Really just couldn't get any traction to the upside. Some of our leading stocks, like SMCI, just got hit very hard. SMCI down over 10% in a day. And this is why we don't chase these things as they get extended. There's always that temptation, it's down 10%, let me just buy it. But we're so close to that 50-day simple moving average, even if we get there, and let's say like that is the destination, that's probably where I would want to buy some of these leading stocks. Like if they make it back down here, I highly doubt they're just going to tag it and then V off and start moving to the upside. I mean, if we look, this was the last time SMCI had a big breakdown. Broke down, we moved sideways, we broke down even more. We had a rally attempt failed, and then we moved up. So these things, they rarely ever V once they break. But what does end up happening, if you're able to get yourself to a position of safety, whether that's adding a hedge to your portfolio, whether that's getting more in cash, and I know this as well, when these things break down, sure, it's bad if you're like in a bunch of positions, that's the worst thing, getting stopped out. I took some stops today as well. I stopped out on my Pinterest, and I closed out some VIX call options as well, which is decent. So yeah, for me, it was boom, stop out of those. But I know that as we head off of a bad liquidation and investment managers start buying in again, that's when you can generate some really good returns. So I know one of those sequences is coming up where you get some of these things, maybe they pull back to the 50, maybe even deeper. And when they make that explosion off, you can really generate some very nice P&L. I just don't have any confidence that it's like right around the corner. So I hate to say this, but you're going to have to be patient. I know there's a lot of investors, they just want to make the money every single day. They want every day to just be like that ripper to the upside. I think from everything we've discussed so far, there's going to be great opportunities, especially into 2023, but it is really going to require the prudence and the patience to wait for those to come. Because what tends to happen is if you don't have that patience, you end up either just staying long or getting long prematurely, and then that golden opportunity comes. And usually the golden opportunity, just to share with you, is it's typically when everyone is like liquidating and everyone's like, with their hair lit on fire, screaming, running around. You know that, okay, as soon as this period ends, as soon as some normalcy returns to the market, that's the opportunity. When everyone's pretty much caught on the wrong side. Yeah, you got to be able to wait for that though. That's the tough thing. And honestly, it's a feature of this bear market. If we were in a bull market, this would be a lot different. It would just be like, okay, wait for pullbacks to keep moving averages, boom, load up. And like, we're just going to be making money like all the time. In a bear market, it's really like, can you not lose your shirt? And if you can make some money in those bear market rallies and those upward sequences, you're doing really good. I mean, we are watching the market every day. We are going to be here when that happens. So we're in this together. We're all going to make it. Trust me. So let's see here. What else do we have for the day? Oh yeah, one quick housekeeping item. We are rebalancing our Pristine Capital long-term investment portfolios. Those are going to be ready for tomorrow. We're going to be sending an email out to all of our long-term investing members. If you're interested in that, visit pristinecapital.net. And that's included with our active trading membership. And it's also like a standalone product as well. And here were my executions for today. I stopped out at Pinterest right on the open. And look at this. This was my entry in Pinterest. I entered it heading into Fed Wednesday. I wasn't sure if the market was going to move up or down. I wanted to get myself closer to 50% exposed because the market looked pretty good. And you can see getting myself to 50% long exposure. I have my stops set and I'm prepared to take them if things do not go according to plan. If I end up getting stopped, I'm not going to have an emotional reaction as I know on entry that a max loss is a real possibility. That is just the mindset that you have to have whenever you're trading, whenever you put something on. You just have to be like, what would happen to me if I took a max loss? And you got to be okay taking it, because for my strategy, I am going for tight stops, making sure I'm taking them all. On the reward side, I want to achieve 2 times my risk budget on my winning trades, and I want to win half my trades. I'm going to be perfectly honest with you. For this week so far, this has been a red P&L week for me. I took, I think it was like 3 or 4 trades trying to get myself a little bit more exposed. I took off one of them for a winner, ended up losing either 2 or 3 other trades. It's never fun being like, yeah, I traded through FOMC, ended up taking some losses, but I made sure to not get too exposed where it would not be like a huge drawdown or it would be anything that would, keep me up at night, because heading into the event, the market was looking strong, but I knew it was a binary event. So it's not like, oh man, I was so stupid for putting this risk on. Like, I'm never doing that again. It's, no, I put the risk on. I knew there was a chance things could resolve to the downside. They could have easily resolved to the upside as well. Take my stop, and we move on to the next sequence. Because I know that when the market has its very nice sequence, I'm going to be able to catch it. And when the market gets in its upward sequence, I know that I am prone to having multiple winning trades in a row. My best streak, I think, was in the summertime. I think I had like 20 winning trades in a row. So I know, hey, if I went 3-1 this week, that's not a big deal. I got to back off. But I know that when my time comes, that's going to be no problem to make it up. So that's really my approach to the market. And it really requires a longer term point of view, right? Because my opportunity might not be around next week, might be in the beginning of the year next year. It might be, honestly, at the end of Q1. There might have to be some major carnage before that opportunity comes, but we're going to wait for that opportunity and we're going to seize it when it is here. With that said, thank you so much for watching the video. Make sure you like the video. That really supports the channel. Make sure you subscribe to the channel as well, and we'll see you all next time.